Good morning, good afternoon, good evening, everybody. This is Will Bridges from 123Trade. We're just about ready to start today's client-only trading session. Was a very interesting week in the markets. You could say all of them. We passed another $1.5 trillion bill through Congress here this week in the U.S. It seems like if we ever spend money, we don't spend less than $1 trillion anymore. So there's lots of movement in the markets today. Seems like the dollar's actually taking a little bit of a break here. It's been on a very solid bull run for a while. It still does look like we're in bullish territory, trending upwards very slowly. But we'll get to that on the chart here during this session. We've got lots of live market analysis to do. I may play some trades. I'm going to show you guys a little bit of a, well, I guess some people would call this a mistake. But, I want you guys to understand really what risk tolerance is all about, what that might mean for you, what that might mean for me. And I'm going to show you guys more or less, because I trade in here every Friday and I don't really do anything else during the week. But lately I've been running the Active Trader Max during the week. And I've been pretty cavalier with it because I think I've lost with it maybe one trade out of maybe 40 or so this year so far. So I'll get into more details. I'll show you guys what I'm talking about with that. So you guys can have a better understanding of how to, really more responsibly run a trading system in your accounts. But I hope everybody's doing well. We still have a couple people floating in the room. I want to make sure everything is working well. Everybody's awake. Let me go ahead and get this questions box. What's up, Philip? How you doing, John? How's it going, Neville? Michael? Gonna wake everybody else up in here. Let's see. Siva, Gabe, Elaine, Keys. Is anybody here for their first time? Usually there is. Looks like a few people are here for the first time, actually. Good to have you here, Brian. We've got lots to cover. Lots to cover, but we might as well get to it before I do too much yammering without showing any of the good stuff. So let's go. Okay, first things first, I got to cover my base. This is a risk disclaimer for those of you that are brand new to trading. And you will see lots more of them if you continue to trade. What it says is that if you put your money in the foreign exchange market, your money is at risk. You have to risk it to get the biscuit, people. No such thing as a guaranteed trade. No such thing as a guaranteed win. Doesn't matter how smart someone sounds. Okay, so let's keep on moving here. Okay, so if you do have a question, I know a lot of you are very keen to ask for things, and I very much appreciate that. It makes it a lot easier for me to know what you guys actually want to see, what you need more information about. The way I see it, silence is violence, people. If you have a question, lots of other people have that same question, and I want to make sure that we clear up whatever potentially confusing thing it is that I said. So we've got lots to cover. I want to make sure I don't spend too much time making sure you guys ask me questions. I want to get to the things that you may have questions about. Those of you that are new, maybe just kind of stumbled into this group because you got a trading account through us and maybe you didn't even realize you got these trading sessions, or maybe you're watching this on YouTube or whatever, because this recording should be up later. Obviously, I'm doing this in GoToWebinar here right now, so it won't be streaming live on YouTube during this session. But we do help people get regulated, secure brokerage. We want to help people get the most awesome trading conditions in the world, because trading conditions are not all created equal. We want to give as much guidance and mentorship as we can. I'm going to do lots of live market analysis in here. I want you to guys know what it looks like to place a trade. I'm going to place live trades in this session with my money. Okay, so I want to help people understand, a lot of people start small, and I want them to understand what that means, and really how that might work against your head emotionally. So we're going to get to live charts here in a second. I used to cover a lot of different things in this session. This actually used to be just kind of like a, hey, this is how you set up all your stuff type of thing that we did it once a week. But now I made videos for a lot of that stuff. It's on our website. So if you go to 123trade.com, very straightforward name. I love it. 123trade.com. If you go to the YouTube page on that website, would you please trade the Euro USD? I will look at it, Elaine. I won't promise that I'll trade it in the session. I'll trade it in the session if it's at a nice place to buy it or sell it. But I am more than happy to bust it down and look for an opportunity. And hey, if there's if the moment arises, we might make a scalp trade, or maybe there's a good position. Generally, there's a lot happening in the world right now, and it seems like war in Ukraine may be coming to a close here quickly, which is very suspect considering we just passed a $1.5 trillion bill here in the U.S. yesterday. So interesting that $14 billion of it going to Ukraine would end the war. But, you know, we're not here to talk about politics. We're here to talk about, well, that's a big increase in GDP if we spend an extra 1.5 trillion, and that would mean more demand for the US dollar. So it is interesting that we're seeing a little bit of a dump today. But let's get over to the cool part. Yes, I agree, John. Life is very suspect these days. It's hard to trust anybody anymore. So I'm going to get to the charts. Once we get through a little bit of what I like to call real news, okay, and this is really just the raw economic data that gets released. Okay, so this is really where I prefer to get my news, because I feel like there's less bias in the numbers if I'm just looking at the raw economic data. Okay, this is not, there's no news spin on the data that the governments release. Okay, so government data is still, well, let's just say much more trusted than any news source I know about. You know, some people in this room are going to very heavily trust their news source and very heavily distrust other news sources. And another person might have the exact opposite of that perspective. Okay, so the reality is that no one trusts all the news. This is the closest thing that the markets can really trust. There's the least amount of spin here. Okay, so when we look at this, job openings, okay, that came out higher than expected. That means a ton of jobs are available in the U.S. These are crazy high numbers. You guys see this? But somehow we have 3.8% unemployment. So it really, this number is a little bit odd to see that we have this many available jobs and they can't get people to go to work. Is really what the problem is. Primarily because, well, you can't evict somebody if they don't pay their rent here in the U.S. And, you know, other than that, people are no longer paying their student loan payments right now. There's a lot of reasons why people may not go to work. It's actually been pretty profitable to be unemployed in the US for the last year, and that's why people are doing it. Okay, so as they lower the incentive for people to work, okay, the numbers are very clear. I'm just showing you the economic impact of what's going on. Okay, doesn't matter what you think about the policies. I don't think it was bad to support people in a time that they were put out of work. That said, I think right now not working is kind of a choice. But I mean, you may have a different opinion. Doesn't matter. There's 11.26 million jobs not being filled for some reason. Okay, so that said, they are not going to be raising the interest rate in Europe. If you can see this here, not a very profound statement for me to make. They haven't raised it since well, a long time. They were lowering it all the way back here. Okay, so this is what interest rates have done in Europe for the last 20 years. Something tells me they may keep them low. So not going to be crazy hawkish on the euro anytime soon. If war had continued in Ukraine, or if it does continue, I should say, then I may see some more weakness on the euro. Let's say we've seen lots of it the last few days. I think the euro got all the way down below 109 last week. Okay, so CPI number, okay, this is the consumer price index. Okay, and this one's kind of funny because they're telling us that, you know, month over month prices went up 0.8% for consumers. Okay, it's really confusing what they could possibly be putting into this number. These are very high, by the way, if you can't see this. Okay, but if we go and we look for something like, I think this is on, what website did I have this on? Bar chart, commodity futures. Is this commodity prices? This might be it. Performance. It's the full list. And I just want to pull this up for you guys real quick so you can know, really how much are things actually increasing in price. Okay, if you look at corn, the last 3 months, it's up 26%. Soybeans, you guys see this. The only thing that's down here is oats. Okay, so very odd that we could see these, multiple double-digit 30% numbers in food. Okay, that's huge. Okay, that's a big deal. What this means to me is that we might see a little bit of a bite in the ability of consumers to purchase things very soon, because oil is up 49% in the last 3 months. Okay, you look at a lot of things, natural gas, 27%. Are you guys seeing what I'm looking at here? Okay, this is gold up 9.8%, silver up 16%, copper's up 8.9%, palladium for some reason 57%. Okay, we move down here, cattle got cheaper somehow. Okay, cattle got cheaper, but hogs are 16% up. I'm failing to see where the 7% for the year is at because, I'm not sure what the volumes are of all of these markets. I guess we could look all that stuff up too. But what this all means to me, and then I come down here and I look at bonds, okay? This is bonds. These all look negative, okay? So what this means to me, if I'm running the Federal Reserve and I want market liquidity to happen, okay, I'm more than likely going to have to support the bond market. Okay, you don't have to be, brilliant to see that. Commodities are more expensive. Okay, so inflation is high. Okay, bonds are not worth anything right now. So there's really only one realistic solution. They either do it or they don't. That's the thing. We don't know if they do it. Okay, the point is, we know there's going to be action on the dollar. I don't know what direction. Not yet. Really not until it actually happens. Okay, because the government will make moves. Okay, so it's not something that I'm going to get to decide the direction. Canada, this looks healthy as heck. Happy for y'all. Because this is a big number. That's a big growth number in Canada. That may be why I'm taking a little bit of a beating on this USD Cad position I'm in right now that I got into with the active trader. Unemployment rate is way down. That's huge. Okay. Golf claps for all the Canadians in the room. Congratulations. I'm not sure exactly what that means for anybody in the room, but that's usually a pretty good sign that things are going the right direction. But let's go ahead and look over at this USD Cad. I've been talking about it too much. Let's be about it. Okay, so I'm going to actually go to the all-time frame before we zoom in on where... Well, I feel like let's just say if I was really worried about $500 that I put in this account to begin with, then maybe this would be scarier. But the reality is there hasn't been a lot of movement. Okay, so we're zoomed all the way out on this. I want to get an idea for what, really the market may be doing long term. And this is something that I think is what's really going on here. Okay. And there's a lot of places you could draw these lines. But, as a mathematician myself, and I was always told that things like to regress towards the mean. Okay, the mean is the average. That's really all that is. Okay, regression towards the mean just means it's going to move towards the average. This looks like it's moving towards the middle of those two lines, doesn't it? I got a Y or an N in here. I just want to make sure that you guys are awake. You guys, does that look like we're moving towards the middle of those two lines, or at least we have been for the last, 15 years? This is long term. One thing that everybody needs to understand is that only 5.5% of the volume, sometimes, and I've seen lower estimates, actually comes from retail traders in the foreign exchange. The rest of it, 94% plus, large institutions and banks, central banks, governments. Okay, if the government decides they want to spend $1.5 trillion of the American people's money this week, guess where that comes from? It's going to come from the Federal Reserve, and they're going to print it out of thin air because the U.S. government is in $30 trillion worth of debt. The global debt is $280 trillion. So yes, spending is going to increase on the U.S. dollar by a lot in short order because the government's going to decide to ramp that up heavily. The problem is that it's also going to create inflation because we don't have the physical money. Okay, so that gives us kind of a sideways type of move that often happens. Okay, and what we're looking at here, we've got an inner trend line as well. Go ahead and draw this. Okay, and just work our way in towards what's actually happening and something we can actually use. We had a long-term downtrend that we'll look at here on the week. We'll just zoom in here because I'm not close to any of these lines yet. I can't make a decision off of any of them. Depending on how patient you are, you might, but I would say there's very few people in the room that are going to look at the monthly chart and make all their decisions. And if they do, it's not going to be very often. So that said, okay, what I want to look for here is, well, where is the demand? Where's the supply? There's really two kinds of trading. None of these lines are really doing anything for me other than telling me we've moved towards the middle. Okay, and that's something I could find just as easily with this box over the last, 7 years? Okay, so here we go. Here's the last 7 years. You guys see where we are? Okay. These are high prices up top. These are low prices at the bottom for the last 7 years. Really, we can get all the way to the edge of it if you guys want to get prettier about it. We can do that. I don't need to be discriminatory versus high or low prices. But this is our box. Okay, so can we come back to the bottom of it? Yes. Can we go back to the top? Yes. All those things can happen. Okay, if we zoom in more, we look at the weekly chart here. The range has been very tight for the last few weeks. I want to figure out where might the action want to go. Okay, where is the supply and demand in this market? And what prices below are most popular, what prices above are most popular, and how far away are they? Okay, that's something that, because how many of you are familiar with supply and demand? Give me a Y or an N in the chat box. As it relates to trading, I want to kind of figure out how much detail I need to go into here. As it relates to a chart. Okay, so there's not a whole lot. It's kind of 50-50 in here. I appreciate that, Phil. Thanks, Ricardo. Thanks, Neville. It's kind of 50-50, it seems like. Some more answers roll in here. Very 50-50. Okay, so supply. Okay, a lot of people want to figure out how much of a specific quantity of a thing exists. Okay, how many of you are familiar with McDonald's? Anybody in here familiar with McDonald's? You guys ever heard of the Golden Arches? The McDouble, the Big Mac? You guys familiar with that? Do you guys, those of you that, I think everybody probably in here has McDonald's in their country somewhere. They've probably been there. Yeah, exactly, Ray. Had a Big Mac once. That's usually enough. There's usually too much special sauce on there for me. And usually it makes my stomach upset. I think they're, well, let's just say we don't need to get into what I think about McDonald's. But everybody knows who they are. Everybody's probably heard of the, well, let's just say we had the dollar menu here. Okay? For very many years, we had a dollar menu. There was a lot of items you could purchase for $1. You could get a double cheeseburger for $1, a chicken sandwich for $1, French fries for $1. There was a lot of things for $1. And they had that for years because people would roll up and just buy 7 things off the dollar menu. That opportunity no longer exists, but I can tell you that people still want to pay $1 for that type of thing. I would love to pay $1 for a double cheeseburger that's now $3. Okay, so if double cheeseburgers became $1 again, do you guys think that do you guys think that demand would grow and that people would buy them? Yes or no? Would people buy more double cheeseburgers if McDonald's came out tomorrow and said, hey, we're going back to 2013 pricing? Do you think people would buy more McDonald's? They just suddenly, oh yeah, they would. This is a very, I know this is a little bit different than looking at the chart. So what I want to show you guys is what prices people paid the most. That's what I'm going to consider, what prices people paid the most at and what price they sold the most at, okay? So the biggest moves that happened, okay, there's lots of sell action, okay? Once the price got up to here, okay, where my little red box is on the top, that's very much, very much a sell zone, okay? If the market gets back to this red level, how many of you guys are going to think, hey, the dollar's expensive. I want to sell it. This is a weekly chart. Okay, those prices have been hit twice in the last 7 years, and both of them caused, let's see. Let's take a look at this. Okay, this move downward here, we're talking 2,000 price interest points. This one here, 2,600 price interest points. You guys would, if the price got there, you guys would want to sell it just as much as you'd want to go buy cheap cheeseburgers, right? So I don't necessarily have to know why that happens or what the underlying reason is. I just have to know that, well, the price gets to that price and somebody doesn't want it to go higher. And I don't know necessarily who it is or how they're going to do it. But darn it, it seems like the government and the Fed will do whatever it takes lately. And we're going to look at more charts with this type of range here after we get done on this dollar Canadian. But I'm going to show you guys why I'm probably going to stay in this trade. Okay, there are going to be more zones within. Okay, that's not the only zone. Okay, let's stretch this out a little bit. What would you guys think is the most popular price level in this little junket here? Okay, we talked about regression towards the mean, towards the average already in this session. Okay, So what I'm talking about with that, this looks like where most of the price action has been, right in here, for the last several years. And we had big turnarounds happen, okay, within this price zone. Okay, we pinballed in here. That for some reason they like whoever the price gods are, they liked this range of prices. You know, they turned it around to get back in it there. I need to get a lock tool on here. Hold on. Okay, they did it here. They did it here. Oh, why do I keep missing that? There we go. Here. Okay, we did it over here. Okay, we wanted to stay in from the top. We stayed in from the top over here. Here's another one. Here's another one. Here's another one. So this to me looks like another place where, you know, people like to buy double cheeseburgers in here. That's what this means to me. Is that if we want to sell more double cheeseburgers in Canada, we better have them at this price. People were comfortable buying and selling at this price. This was a comfortable place for business to occur in here. Okay, would you guys say that, you know, maybe 2019 was a much less stressful time for Canadians and maybe for Americans? Would you guys agree on that? Is that fair to say? Yes or no? You guys think it was less stressful to live in 2019 than it is today? Just in general. I know it's I'm keeping it vague here, but we're looking at pricing data right now. Okay, so if we know that the populace in general was more comfortable paying these price ranges, then we might think that they want to get back there. Okay, there are also there are also lower prices, okay, that we may want to test because there are all of this demand over here. So long term, and this is long term, okay, assuming things continue to go the way that they are with oil, Americans could see a lot of pain in purchasing gas. Okay, so could the rest of the world, all of you. I don't know what gas costs for you guys right now, but it's over $4. They basically look like, I mean, it's really getting over $4 here per gallon. Now, you guys are probably seeing crazier in Europe. I'm not sure what you guys are paying a liter. I know that measurement systems are different. But I'm going to go ahead and change the color of this on the bottom here because this is another big demand zone, okay, down here on the bottom. And actually, I'm going to unlock this tool and just change the color of the one I already got here. Change this here. Because if the price of the, well, let's just say if the dollar gets down into this green zone here, okay, these would be close to, you know, 30-year lows that we're talking about. 185 per liter in Ontario is crazy high. Liters to gallons, I think, I don't know, I don't remember exactly what that is. How many liters are there per gallon? Is 1 liter equals 0.26 gallons. So 3.8. So 3.8, wow. So you're talking like $7 a gallon, Phil. That's really, wow. I'm sorry. And I appreciate the push towards renewable energy, but I also understand that we have a supply shortage and there's not enough cars to sell. Okay, so that stuff doesn't exist right now. Okay, there's another demand zone higher than this one that I've just drawn here. Okay, as far as demand goes, I just want to look for places where there were prices that people liked to pay for a long time. That's what this is. This big area is, but I can't make a decision off of that. I could make a decision if the market were to get somewhere down, say, to here. Okay, if the market gets down to this level here, okay, there's lots of reason for me to believe that the magical forces at work are going to do something big, try to make the market go up. Okay, question is are they going to, is the market going to come down here and test this box before it tests my big box on the top here? Both of them are kind of magnets on the market, and we're kind of close to the middle. Okay, but as per the last 7 years of data, this big red, highlighted red spot I have is kind of the meat spot. Okay, and outside of that, I want to come down to a lower time frame. Let's come down to the 1 day. Okay, we're on the day chart now. And I want to know what the trend's been doing. Okay, so when the COVID madness started, we saw a big spike in the dollar as the stock market sold off and everybody panicked. Okay, and then everything recovered. Okay, and when I say recovered, very slowly. Okay, we broke this trend that I'm looking at now. We still have our demand zones that exist here. So right now we're looking at, well, we should be in uptrend territory, but let's go ahead and check. I'm going to get rid of this downtrend that is no longer happening. and I'm going to measure my trend on the bottom. Okay. And what it looks like to me, you guys see that we're above that, right? This is the rhetorical question. We're above. So what that means to me is that we have not yet confirmed a continuation of this downtrend on top. We haven't confirmed that. We are falling right now. And, you know, some people would look at this and they're going to say, oh my gosh, $135. Truth is, I'm still up 30% this year, even if I close all these trades right now. And I'm not going to do that. I'm going to show you guys why. I'm going to scroll down here, get down to the 4-hour chart. Okay, I'm just going to keep working my way down, figure out what my bias is, okay, where all my heavy levels are on the high time frames, and I've got them drawn there. I've got big zones. Now I've got this, you know, I got a couple end zones on here for myself where I can see, you know what, if the price gets all the way up there, I want to stop buying. I want to start selling. I haven't done the euro yet, Ray. We're going to do it next. I know that everybody's, we'll just say that's the most popular instrument in the trading, in the history of trading. So, yeah, we're doing it next. I'm with it. Just want to make sure everybody understands. Okay, so the way I got into trouble with this active trader, as far as this account size goes, because this is way too much risk for a $500 account. I guess there was $700 or so in here. $750 is still my balance. Okay, so I was up 50% in just raw profit so far this year until I made this decision. Okay, and now I'm looking at down $133. Some people are going to panic here. Okay, it depends on how much money that you have. Personally, it's difficult for me to sit and trade micro lots because, well, it's a really insignificant amount of money in my brain. Okay, so that being said, you know, if I'm trading an account this size, that doesn't mean I should be irresponsible. Okay, so the mistake that I made is I allowed it to take too many positions. It took 4 of them. Okay, and it stepped up every single time. So 3 of these are bigger than any loss I've ever had in this account. Okay, so if I had stuck to just trading in my micro lot positions and I got totally smoked like the market's doing right now, then I would still be up 40-some% for the year. Okay, but the reality of the situation is I allowed the robot to trade more than I wanted it to, and I haven't cared all year because generally it's been killing it. I think win rate so far has been in the mid 80% range. It's pretty incredible. And it still could win. I'm still in this trade. But this happened to me because my computer decided to restart. I was not running this on a VPS. And, you know, Windows likes to update sometimes. So now I want to know, okay, is it time to get out of this trade? Do I dump it now? In my opinion, no. Okay, and here's the reason why. Okay, we've talked about demand, talked about supply. You guys see this area of prices right here. Okay, you guys see that? Of course you do. If you're watching the webinar at all, you're looking at it. But we've got lots of demand in this zone. Okay, and we just came back and tested the middle of it. Okay, and this is on a small time frame. This is very much the exact same thing that I'm looking to happen on the higher time frame that we just looked at to come back to the meat of this market above. Okay, very same thing that just happened on our low time frame is exactly what I'm going to expect on the high time frame. So I am going to let this ride. My system is no longer running, so I don't have a stop loss or a take profit. Okay, so since that's happened to me, I need to manage this position. And I need to make sure that I don't end up losing money this year because I, you know, let the system do a little bit more than I wanted it to for a couple of days. These trades all opened on the 8th. Okay, so I want to figure out now, you know, do I stay or do I go? Where do I go? I need to get a better bottom here. Hold on. Get my Fibonacci tool on here. I may have to do this from the weekly. Seems like I might at least. Yep, I'm going to need to do this from the weekly. I may try this one here on the low time framer just for funsies. Okay, just to look at this here. Because we're still in uptrend territory, people. This is still making higher highs. We just got a higher high on Wednesday. This is a higher high. Okay, so we haven't hit our extension, which would actually be my green level above here. So I may be less cavalier. Okay, but here's my higher high that happened just a few days ago versus my boundary. So I've already broken out on this boundary. Okay, as long as I stay inside my AB boundary here, I'm still thinking bullish. We're still above our trend line. And, well, let's just say everything can change in a New York minute, people. Okay, so right now we are not quite. We're at about our 50% level on this current AB boundary. We've already come all the way down to our green level below. So my exit price that I'm going to look for is going to be much more modest than it was in the past. And I'm going to look to exit at my green level above, where I would still win all these trades at 129.2. So I'm going to go ahead and add a stop loss for myself. Okay, at 129.2. 129.2. Okay. Oop, hold on. Make sure well, that is much higher than what we're looking at here. Oh, JK, that's my profit line that I'm looking for. That's why that's not going to work. Sorry, I got a little confused there, folks. 129.2 is my limit. Okay, so I'm not going to be able to put a stop in there yet. We'll go ahead and check on that here real quick. So stop loss. Okay, this is important. Let's go ahead and get our smart support levels on here so I can see where those levels are. And I'm going to come down to my 4-hour. Let's see. You need a better singing voice. Yeah, I know, Raymond. I seem to get that a lot. I'm much better at listening to music than making it. I think I'm very good at listening to it, but singing it, no. If I do not have a VPS, do I need to keep my laptop on 24/7, 365? I thought broker manages that part. I can turn off laptop after placing buy or yes, you can, Syed. The reason why I have to manage this is because I was using a robot without a stop loss. Okay, so it doesn't have an actual stop loss. It makes its decision based on indicators. So if that system gets turned off, I can end up in the mud like this in a hurry. Okay, so that being said, okay, I'm probably going to want to have my stop loss below this price where the market's turned many times, okay? Because I don't want to get out at this level only to, have the market make a big, strong move my direction where I would have got all my money back and then made some. Okay, the market's turned here 1, 2, 3, 4, 5, 6, 7, 8 times out of 9 here. I'm confident that this 6S1 level here is going to be solid. Okay, so if I'm not already in this trade, I may be just looking for a consolidation trade, something like this. I'll just draw this quickly for you guys. This is really what I would, if I was not already in this too heavy, I would try to get in here, exit up top, and have my stop loss below these levels. There it is. That's the whole trade. That's the buy that I would be looking for right now. Pending order setup, no question in my brain. Okay, high probability. Typically, the market likes to test things. I do think this is going to come much higher because I think that a lot more can happen here quickly. As let's just say the U.S. has recently released, I think, another $7 billion to Iran, which typically results in last time it resulted in them bombing Israel, within a couple of weeks. So I don't like to make calls like that. It's hard to be right about things like that because I don't really want to be. But realistically speaking, it's a fear of mine. So I think that the dollar can have more strength for a lot of reasons. But the reality is the chart agrees with me. We're in an uptrend. There's a demand zone above. I don't want to get too far in the weeds on this. Let's go ahead and get a stop loss and get over to the Euro USD. My stop loss I want to use is a 126.4. Okay, gets to 126.4. I want out. I'm going to go ahead and do that same thing here on all these. So 126.4. Okay, and then I'm going to put my rate limit 129.2. Set this up on all these so that this account doesn't get too far out of hand. I don't want to blow my whole account, all of my profits, everything on this idea. Okay, 129.2. Okay, so I want to pick somewhere where I'm going to stop the bleeding. Should we get that far? And I don't think it's right now. I'm not into buying high and selling low. So I think I look for a consolidation move. I may get out sooner, but this is really what I'm looking for at the moment. Oop, hold on. Did that backwards. $292. Kind of having a hard time walking and chewing gum today for some reason. Two things at once. So let's get this 126.4. And our 129.2 on here as well. And now I'm not sure, I guess Syed, it was you that asked the question. So now that I have these stop losses and limits on here, okay, I don't have to worry about managing this anymore. Okay, the market itself, okay, well, let's just say not the market, the broker themselves, I basically just sent them an email. It's in their inbox. It's on their server now. I'm getting out at those prices. My robot is no longer going to be making the decision. So it doesn't matter if my computer shuts off or anything like that. I can walk away from this and we can move on and look at the Euro USD. I no longer have to worry about blowing out my account on this chart. USD Cad Entry was the blue lines that I had here. Just to come back here, this is a pending order that I would be looking for here. So I'll make this a little bit clearer. I'm already in too heavy on this one as far as I'm concerned, and I don't want to invest any more money in the dollar Canadian right now. But basically, I'm looking for an entry at 126.897. Why would I wait rather than go in now? Because if I wanted to get in on this chart, well, let's just say I'm already betting almost, I think, a mini lot. Yeah, I have a mini lot in this position. I have no business being a mini lot heavy into the dollar Canadian as it is. That's really what I would want to do over every instrument. So I'm kind of taking a bath right now. It's getting closer to where I think it might actually make its turn because it has many times before all those little yellow circles on the bottom. But, you know, really, it's a trader's choice. I'm not worried about $150 or $200 or $500 or $700 or any amount of money that's in this account. And that's really the way that I like to live. If I have $50,000 in here, I don't want to care about it. If I lose all of the money, am I still going to be able to live my life and do whatever I want? That's the amount I want in my account. Because if I close these all right now, I'm still up for the year, 20%. More than most people can say in any type of investment. So I'm not going to have a pity party for myself. I'm going to set a place where I'm not willing to be in the market anymore. And then I'm going to forget about it and go back to what I was doing and find another place to maybe trade my way out of it and look for a win somewhere else. Let's clear this screen out. Let's go to the all time frame. This is the Euro USD. I know a few of you guys have been waiting for this one. Okay. I know I went into a lot of detail on the dollar Canadian, but I feel like there was a good teaching moment there for people as far as you know, how to manage your emotions while you're doing this type of stuff. Okay, so let's go ahead and draw our trends here. Okay, this is really what I've been looking at here. I've probably drawn these. If you've been to these sessions, you've seen this from me many times. Okay, this is what I'm looking at. This is what's been going on for the last 30 years. Okay, so this is our Euro USD. Okay, I know I made a joke about making a decision on the monthly time frame, but does it look like our lines are close to current market price? Do you think it's possible to make a decision on a trade on this chart? Yes or no? Just give me I want to make sure everybody's still awake here. Okay, do you guys think it's possible to make a decision on the Euro USD right now looking at only this chart? Yes, no. I love the indecision. The question is, you know, really, if I wanted to make a decision right here, right now, it really depends on how patient I want to be, because the moves on this chart are going to take months. Okay, so a lot of people don't want to tie up their money for that period of time, but a lot of people might come here and look at this and say, you know what, I'm going to start building a position on the stability of Europe, because I think that war is going to come to an end. Nuclear holocaust isn't going to happen. And this is our range. And from a risk reward standpoint, I'm looking at a place from this high time frame. You know, the market has to get below a price we haven't seen since April of 2020. Okay, and it's got to test prices all the way down here that we haven't been since 2017. And really, I could be below those. Okay, if I come below those here and have my stop loss a little bit lower, okay, I still have almost a one-to-one opportunity here that I could build more if I traded small enough. And on the top side, I'm really just looking for 765 pips. Okay, if you're willing to risk 541 pips, you know, that really makes this easy, because that's $50 from a micro lot position. You know, $54. Most people aren't going to sweat about $54. You know, no matter how long it takes. You know, if we get back to 117, anybody here think there's a reason why we'll never get back to 117 on the euro versus the dollar? Anybody think we'll never get back there? Yes or no? there a reason why we could never get back there? I don't think there is. I think there's a reason why we could come way lower. We talked about supply and demand before, and I'm going to go ahead and highlight a very popular price here on the top. This is an area that I would look to be selling in, okay, because previous support becomes future resistance. I would be looking to sell up here, okay? More supply and demand, okay? On the bottom here, okay, if we get to even lower prices, I'm an even happier buyer at this price, okay, than I would be at current price, okay? So we can come lower, and I've got nothing against. There's no way that I can stand here and say like, hey, it's coming up right now. It may not. I'm a heavier buyer though at this green level below, and the biggest level, if we get back to that, you know, early 2000s Y2K price, there's demand all the way down here. Oh, I don't want a line, I want a box. Sorry about that. There's demand all the way down here. I am definitely a buyer down there unless Europe no longer exists. Okay, so regardless, you know, I am a buyer at current market price on this chart. Okay, so I'm very likely going to be a buyer on a lower chart, but I want to confirm. I want to figure out how much risk I can take at a minimum to make the most bang for my buck. Okay, and right now I've got some big levels below. This line's kind of in my way now. Okay. I kind of want to get a feel for, well, how far this thing's likely to come. Okay, where is it going to go? We've already tapped that target. Okay, there's actually, you know, I kind of want to turn on an indicator here real quick. Not this one, sorry. I want to go ahead and turn on my targets real quick. Let's see. 2.0, all targets. This is a throwback indicator. This one's old, but I'm a fan. I'm going to come down to the day chart here so I can actually see where those targets are. And I want to look for an unhit target, okay? An unhit target basically means that a lot of people got hung out to dry on a place where they were trying to, well, potentially sell, okay? And really, targets get hit usually, usually they happen right away. They get hit most of the time, okay? I'm going to go ahead and circle one up here. This is a price that the market never really came back and tested right here. That's why we have that unhit target. Okay, so I'm going to look to trade back to it. Okay, for a lot of reasons. One of them being this is also a W here. Okay, so that's my missed target that we had. I guess this is an M because this is the other way around. But I'm going to go ahead and draw what I'm talking about. This is an M. Okay, right here. Okay, so once we break out of this level here, typically the market likes to come back and test this level. Okay, I drew that kind of ugly, but you guys get the point. We're going to have that cute little curl on the end. Okay, that's usually what happens. We didn't quite get to our price target. Okay, so that being said, okay, I want to trade back to it. I think there's money all the way up to 119.5. I don't necessarily want to get in, you know, with the intent of trading all the way to that price right now. I may want a shorter term move because, well, let's just say life happens fast lately, and I don't want to make a speculative move on the next several months right now because, well, let's just say it's an election year. Okay, that has historically been a very volatile year, and really in the U.S., if let's just say if Congress changes hands, we're going to see a big change globally. We hit our extension down here. I want to see this is still currently an against the trend move that I'm looking for. We haven't had confirmation. Okay, so this is really our new range when it comes to Fibonacci's. Okay, so it could come down lower. There's nothing saying that this is the end. Okay, we've already hit the bottom of this new range. We've already tested our 382. There is really no buy here yet, unless you are a range trader. Okay, this is not a buy yet, and here's the reason why. What direction is the trend? You guys see what direction that trend is? Is the trend up or down right now on the euro? Down. Down. Agreed. All of you, it seems like a lot of people on this page. We're below the line. So I'm calling a bottom if I make the buy right here. Okay, and really this would boil down to, you know, if I think war in Ukraine is going to go away, which it might, then I want to buy here. Okay, just on a fundamental basis. But that doesn't necessarily mean we're in an uptrend yet. The uptrend really isn't going to be confirmed until we make this move, okay? And we get a higher low on the right side of the trend line. Okay, so if we get a higher low right here, this is really where I would want to buy, okay? Over there. Okay, so I may not be ready to do this from a trend trading perspective, but I might from a range perspective. If I have both of my strategies in agreement, trend and range, that usually makes me feel a lot better, and I'm more willing to trade something heavier. That said, not the case. So I'm going to trade this really small, and partially because of where the market is. You know, I'm going to look to take a risk somewhere around 600 and something pips if I go all the way down there. I don't really want to do that. Okay, I would much rather risk way less than that. And if I am going to call a bottom, I'm going to do it cheap. Okay, and I'm going to call it at a level where we actually have bottoms all the way up here. Okay, the market gets below this red price, I might want to get the heck out of Dodge. Let's measure how far this is. Okay, so now we're talking about a risk of 230 pips, 240 pips, $24 from a micro lot position. I don't really care about $24. That's okay with me. How do I get enough reward on the top side for it to matter? You know, maybe I look for a price a little bit closer. I've got a missed target way above that I could wait for, but I don't need to. There's plenty of demand. Okay, we've talked about demand in here a bunch. This is another one, what we might call a supply zone, actually. Price supply. People are willing to sell at this price. So if I think I've got big magnets above, and really, I mean, the last time we had a lot of price demand at these lower prices, the market moved up a lot. I'll make this green because that is demand. Okay. Last time we were at this price level, the market moved up, I don't know, 1,600 pips. Okay, so we had 1,600 pips up the last time we got to this price. The dollar menu's back, baby. I'm buying cheeseburgers. Here it comes. Okay, so I'm going to go ahead and this risk-reward ratio, in my opinion, is stellar. Okay, we're looking at this. Okay, I measure from current market price, 565 pips, less than half of that. So let's just say I'm going to risk 225 pips in an attempt to get 500. Okay, and actually we may not go that far. I just measured this. Sorry, we talk lots of numbers in here. Yeah, 564, that's huge. But I don't need to go that far. So I'm just going to look for 500. Okay, because I don't necessarily need to be greedy. And, you know, if I place trades like this all the time, just say I won't be stressed. That's kind of the point. I'm going to risk $24. So be it. These days, that's a couple Big Mac value meals. With a large Coke. That's 2 of them. So I'm okay with that. I'll let those go. But right now, it's dollar menu time, and I'm buying. Okay, so that being said, it's all for the euro. If you guys have anything else in particular that you want to see, then speak now or forever hold your peace. I'm going to show you guys the Aussie New Zealand. I feel like we covered a lot of theory in today's session, not as much live trading positions that I've taken. But I think this stuff is important for you guys. I'm going to get rid of these targets. Actually, before I do that, I'm going to go ahead and show you guys this missed target down here that I want to trade towards. Okay, for lots of reasons. Okay, so I'll go ahead and mark that price. We'll leave a breadcrumb for us, and then I'm going to turn this indicator off. Okay, because this is where I'm going to want to sell to. Okay, and we've talked M's and W's in here before. If this is your first time in this session, I know EuroCAD and USD Cad, we can check those out in a second. But I like the MW patterns. Okay, I showed a kind of a weaker one on a previous chart in this session. That looks like a W to you guys, right? My name is William. I'm kind of biased. I like the W's. M's, I think, are conceptually a little bit more difficult for me to see. But really what I'm looking for is this to happen. This fall, to come back and test my pocket in the middle of my W. And my pocket is this point on the W in the middle. Okay, that's what I want to come test. The reason why I think that can happen relatively quickly. And this Aussie New Zealand is really, let's just say, far away from Europe and far away from the United States. they do a lot of business with China, and China's doing China things lately. You know, whatever's going on with their economy, it's really hard to know. But I mean, realistically speaking, doesn't matter. Okay, Aussie, New Zealand, I think we come back and we test, and very large in part to this low here being higher than this low, and we've got another low that formed after that. So we're working our way down. Okay. Yeah, Ray, it's the dodgy biolab thing is it's hard to know what's going on with that, but you know, I don't trust our government or Russia's, so really any of them at this point, primarily because I watch what happens on charts all the time, I think. But market manipulation is a real thing. You just have to understand, you know, where the money might go. That's really the only thing that I really care about, is where's the money going to go. And you know, if I don't have any control over the situation, I want to try to protect my own interests in the process as much as possible. Okay, so right now I'm looking at this a pretty sweet missed target down here, pretty far away, and I'm getting lower lows on the top. I've got a double top. Okay, and actually let's get rid of my W formation here so we can actually see these tops here. I might actually have a lower high here. Okay, this high was 1.0795. So anything higher than 1.0795, 1.07943. So this is actually a lower high on the right hand side right here. Here's a high, and this one is slightly lower. Okay, so we are bending. Okay, another way for you to check on this is to go ahead and draw a trend line. Okay, there it is. Okay, what do you guys think? Do you guys think it's sell time? I do. So let's keep on moving. Okay, current market price, we're going to go to blue. Okay, and my stop loss, this is the most important part of every trade. Okay, I want it above my previous high because I can. It's not that far away. My risk reward is going to be solid. Okay, so we made a lower high up here, 95 pips away in risk, and I'm looking for, what is that, 162? I like that opportunity. So 95, 162. We'll just say 160. Okay, my opinion, a pretty stellar trade. I'm willing to risk $18 on this one to try to make 32. So I'm going to click sell. Okay. And let's get over to the Euro Cad. I'm going to try to crank out a couple of these for you guys in a hurry. I know we've done lots of, I think, well, what I like to think would be education. If you guys enjoyed that, I hope you did. There's two ways to get experience. You can either blow out your own accounts, or you can hear about the stories from other people that have before. And you can understand how to manage your risk. I mean, that's really the big thing, is really just understanding what it is that's going to cause you to lose your mind and make bad decisions. Okay, so this Euro Cad is a relatively interesting case also, kind of like the Euro versus the USD. This is kind of what our trend has been for the last many years. I'm going to make these back to solid lines. Go ahead and draw the bottom here as well. Okay, so this is kind of, let's just say, some people are going to look at this like a channel. Okay, that's really what's been going on, my opinion, on the Euro Cad for many years. And a lot of this might have to do with the fact that oil is in the 120 range. Or it was. I think it's down a little bit right now because we released another 60 billion barrels of, or million barrels of oil into supply. But I think that's a short-term band-aid, just like it was last time. I might have time to show that here in a second as well. But what I'm looking at is this pattern. Okay, what really would frighten me about going long here is really just that we've got a big trend line break that happened, and we've been heading south. Okay, so I'm biased to these lower prices. Okay, there's demand. Okay, the best place to buy, in my opinion, is really all the way down here. Okay. We're not there yet. Okay, so we are testing a low right now. We could come up and test the middle of our range above here, which might look something like this area. Okay, oh, hold on. Lots of turnarounds up here. Oh, I didn't mean to do that. Lost the click. There we go. This area could get tested again. No gospel in the world saying we don't come back up and test the top of that box. Okay, there's certainly a reason to believe we can get back up there. Certainly a reason to believe we can get to these lower prices, you know, based on a lot of things. But reality is it doesn't matter what any of those are. Let's come down to the week. Because it doesn't matter what I think, okay? It doesn't matter what anybody thinks is going to happen. Okay, any one person can say whatever they want, but the reality of the situation is we're below that line. The trend is not up. Okay, so if you are buying it, you are calling a bottom. Okay, the thing that is a little bit concerning is that we just made a slightly lower low over here on the right. So we did break out on the low side. We did bust this low on the left with our slightly lower low right here. So we're still down. We're still a knife. Okay, I'm not ready to buy until we get a little bit more of a confirmation here. I'm also not ready to sell because we're in the middle of nowhere. So what I would be looking for in this situation, since we already busted this lower low, is for a slightly lower test or a potential extension price on my Fibonacci to the south. Let's go ahead and get a better price there than I just got on the first click. And it looks like we've already surpassed that one. Let's go to the high time frame and see what we have. Looks like we hit our extension, okay, on the monthly time frame. Okay, so what I want to do is I want to look to see if we've hit our 382 price yet. Okay, here's our new range. Okay, have we come back up and tested our 382? The answer is no, we have not. We hit our 236, but we have not made it to the 382. So short run, if I am going to look for a trade in the Euro CAD, I'm talking like a today type of thing, then realistically, I'm only going to want to take it back to my 382 price. I'll go ahead and make that green here so you guys can see where I might rip the tape on life with this one. Okay, I don't want to be a buyer past this price at 142.5. Okay, that's far away. That might be a pretty solid opportunity because we haven't tested it. Okay, we did hit our extension. So the market is oversold right now. A lot of people are going to look at things like Elliott Wave, for example. Okay, Elliott Wave people are going to be looking for lower prices or higher prices here also. But I want to go ahead and get a price in the bottom here where I may want to put my stop loss, and I need another current market price. I'll change the colors of these in a second here. Let's make this blue and my stop loss below. If it gets below this new low that we formed, okay, this is the multi-year low that I'm looking at. If it creates another new low, I want out. I don't want anything to do with it. Okay, so I'm going to literally call a bottom here because I've got one right over here on the left. And I might actually even be a little bit more cavalier and say I want to get out if we get to those prices. Okay, so now I've got a solid risk reward here. I don't have to risk a lot of money. If I measure this here, okay, we're talking about 185 pips. This is about 8 cents a pip for me. So this is about a $15 risk. I'm okay with 15 bucks. Most of you probably are too. That's totally up to you. I'm going to risk 15 bucks and I'm going to try to make something like 25. Okay, so all those things considered, I'm looking for a 300 pip gainer on a 185 pip risk. So let's go ahead and get it in here. 185. 300. Okay, click, make sure I get the right stop, make sure I get the right position size, and I'm going to click buy. Okie dokie. So I'm in. And real quick, I know that we're out of time. I apologize. I just want to pull up oil so you guys can stay in tune with this. This is going to be a major market mover. It has been all year. Okay, so really interesting what's happening right now. If you guys take a look at this, okay, we had a trend that was down on oil for many years. You know, prices were falling, supply was coming up, okay, and demand fell, which kind of brought us down to actually negative prices in oil for the first time in history. That trend is gone. It's no more. Here's our new trend right here. That looks pretty steep, right? Okay, so we've got well, let's just say a very downward moving candle here. I want to come into the day chart and I want to show you guys what happened the last time that they decided to, the equivalent of print oil is what they did last time. When they added 55 million barrels to the market from our strategic oil reserve, okay, this is where that sell-off happened. Okay, the market only fell not that far. Actually, I'll get that entire movement in this box. Okay. Let's get this entire movement in the box. I'll show you guys what happened. This is when they put 55 million barrels into circulation. Okay, so now I've got another equivalent box. I'm just going to draw it up. They started talking about that here a few days ago, and that's where we are now. So in my opinion, we're back in buy territory on oil. Whole world is still in the Paris Climate Accord. Oil has an expiration date. They are not investing in new oil fields because why would you? You're going out of business in 20 years. Why are you going to spend the next 10 building something you may not be able to use at all? Okay, so truth of the matter is there's really no fundamental reason why oil should stop climbing. Okay, especially when you come back and you look at this commodities price chart and you notice all of the 50% gainers on all these commodities. Okay, so this is not hopefully this takes a little bit of a break. We might see some higher interest rates here soon. Oil could come back up considerably. That would be a very, could be a strong move for the dollar in the short run and a very weak one for the global economy here as people, can't afford to drive to work. So that being said, I think we are just about out of time. I do appreciate everybody taking the morning or evening or afternoon or whatever time it is where you are to catch up on the market here with me. Hope you guys enjoyed. Looking forward to a fun weekend. We'll see how things turn out as far as things with this dollar CAD. I know everybody sweats about things. I want to show you guys how things have been going so far, so you guys can understand why I care so little about $130 in this account. From a perspective standpoint, this is what we've been doing so far this year. 53% gain is pretty good in most people's opinions, mine included. Okay, so win rate's been stellar. These are awesome. Okay, if I close that out now, I basically give up this month's gain, which would be disappointing for me, but I'm still crushing the world when it comes to averages. So I'm not going to sit here and sweat, lose my mind, when I know that I've been making solid decisions all year. All I'm going to do is make sure I'm protected to a point where I'm not going to give away all my profit on my drawdown here. I'm going to let it run until I don't want to let it run anymore. And really, that's it. I've got everything covered. I've got stop losses here. I can shut my computer off, forget about life for a few weeks if I want to, and go to the beach on Saturday. So you guys have a wonderful rest of your Friday. Enjoy your weekend, and if you can't be good at it, people. Will Bridges from 123Trade. You guys have a great day.